What's going on, everybody? Today we're going to be going over how I made over $5,000 in less than 2 hours trading Forex. Let's get right into it. All right, so first things first, the pair that we were trading is the pound yen, GBP, JPY, one of my favorite Forex pairs, okay? So as we can see, this is my TradeZilla third-party software. Pretty much, for those of you that do not know what a third-party software is, you connect your broker to the software and it verifies your data. This tool also serves as a tracking tool for analytics. A lot of cool insights for trading. I'm not sponsored by TradeZilla, but I started using it recently and I really enjoy it. So as you can see here, what we're going to focus on are these two positions on GBP, JPY. It was on Thursday of last week, okay? And I was short on the pound yen. It was a scalp position. We were in and out with the bag in less than 2 hours, okay? And as you can see, we made just over $5,000, which for me is absolutely insane, just simply because, I don't come from money. So for me, I used to, think that $5,000 a month, from a job was great money. And honestly, it is. But the thing is that when we're so used or conditioned to working for somebody else, or coming from a life where we're not overflowing abundantly, with money and things like that, we can have a lot of self-limiting beliefs. So the real reason I wanted to make today's video is just because I had like a oh shit moment last week. I was like, yo, I used to slave over 100 and what is that, 40 times 4? I used to slave over 160 hours a month to try to take home $5,000 if I was lucky. And last week, I was like, yo, it was a full circle moment. I was like, did I just make $5,000 this morning? I did. And I really want to share with you how I was able to do that. So let's get right into the charts, right? So guys, as you can see, I trade the New York session and I was looking for my entry around the New York Open. Now, if we were to go ahead and just rewind everything and look at market conditions in the past, let's rewind this as well. All right, hold on. Let me do that properly. Boom. All right, so when I was actually looking at the charts, guys, as you can see, there was a lot of room to the left. For those of you that trade with me, I'm really big on price action and market structure. When we look to the left, we see this huge gap in market structure here. Price has not had much activity here, for over about a week or two, meaning that there is an area of interest right around here at this previous area of resistance, and some of you may know it as supply. Now, for me, I view this as a high time frame supply zone. When I go on the 4 hour and I just kind of look at price, you can see that we have support. Let me use my arrow and kind of show you. We have support, we have resistance, we have resistance, we have support, 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 resistance. So I say all of that to say that this area is a really highly anticipated area of interest. There's something going on in this area. I can tell that price is working this zone, and I can foresee something cooking up at this area, right? So naturally, guys, a lot of you will hear, hey, the trend is your friend, just stick to the trend. And, for most traders, that's a really good, beginning, starting insight. But as we all know, guys, with trading Forex, the beauty of it is that we can make money on the way up and we can make money on the way down. All I'm looking for is opportunity to make money. That's it. And as long as your strategy aligns with that opportunity in your trading plan, then it's a green light. You can make money trading with the trend. You can also make money trading against the trend. So in this case, I want to explain why I decided to trade against the trend. So to start, let's start off with this, okay? when I look here, I can see this is the daily now, so I'm going up in time frame. I can see that this clearly, when I extend my area of interest to the left, look, you can even see that like in these areas here, price has been working this zone for a little bit, right? Same kind of concept. Price has been working this zone for quite some time. So this isn't, a brand new zone. Rather, this is a zone that, price has been working since it looks like early March. This is September now, so that was about, what is that, like 6-7 months ago? It was over half a year ago. So there's a lot of liquidity built up in this area. And, if you watch my previous videos or just some of my other videos, you'll know that I'm really big on top-down analysis. That just means using the higher time frame to help pinpoint your areas of interest, just so you know the best opportunities that give you the highest probability setups, okay? So, when I see price approaching this area, I already knew that there was a lot of liquidity. For those of you that don't know, liquidity just means money. And as we were approaching this area, I already had it marked up. So I go down into the lower time frames and try to pinpoint my entry time. Okay, so now we're going down into the 4-hour time frame. We can see that price is pushing up. Okay, now before I look to take a trade at a high time frame structure, I like to look for a 4-hour rejection or candle close before I actually execute. Because if the candle closure, if the candle hasn't closed yet, we don't really know exactly what's gonna happen next. It could continue to push up, right? So for me, I always like to look for that candle closure. So now we see the 4-hour closed as a strong bullish body, but it did close as a rejection of this area. So now what I decided to do was go down into the 1-hour time frame and slowly work my way down from a high time frame like the daily into a lower time frame like the 4-hour and now the 1-hour. So we're looking at the 1-hour. Okay, now I'm seeing that when I look at the 1-hour, I can see something. I'm like, okay, well, price had a really big wick rejection the last time that we touched this area around 190.40, right? 190.40 is this number here on the right. 190.40 is this area. I'm like, that's interesting. So what we had was something called a wick fill. If you don't know what a wick fill is, let me tell you. A wick fill is pretty much what you see here. When you see a big wick up the top, shows that, yeah, price did come as high as 190.38 in this example. But the body, which shows the majority of the strength of all orders placed on GBP JPY in this area, the strength of the orders fell under 190. Now, it looks like the body close was around 189.88. These numbers on the right are what I'm using as a reference. So, that's quite interesting. But this pattern printed as a bullish engulfing pattern. So you see you have a bearish candlestick followed by a bullish candlestick. And because this candlestick was larger than the one right before it, we call that a bullish engulfing, okay? Now, I see a bullish engulfing candle pattern to an area of supply, okay, or resistance, as you may know it. That already for me is showing me, they're working the zone, there's something going on here. Let me take some time, analyze it, and make sure I'm clear as to what I'm looking at. So I already see a wick rejection, a huge wick rejection of this area, and that wick rejection is over 50 pips, just this gap of the wick. So that's a big deal. Now, the wick fill took place right here because this body now filled literally, like, hold on, let me zoom into this a little bit more. Look. So a wick fill is literally the body of the following candlestick completing the distance of this wick. So a wick fill is pretty straight up. You got a wick here. Now the following candlestick body will close at the majority of the wick. Now we're filling that wick. We're filling that gap of strength or that difference in price. I hope that wasn't confusing. If it did, let me know down in the comments so I could limit my blabber. Okay, so, and yeah, just side note, I really do appreciate all feedback. as you guys can tell, I'm a newer channel. I don't have many videos, and I'm just kind of winging it, figuring things out as I go. Any feedback, if you think I can improve on anything at all, please feel free to let me know down in the comments. I appreciate it, because at the end of the day, these videos are not for me, they're for you. Maybe that 1, 2, 5, 10, 100,000 viewers, whoever is watching this is for you. Okay, so please just give me any feedback so I can improve to be better for you. Now, back into the wick fill. You saw that the wick fill took place in the 1 hour time frame. So now I'm slowly descending. I'm slowly going down from the daily, 4 hour, 1 hour. Now we're gonna go into the 30-minute. Okay. So let's go into the 30-minute. Wow, okay, and then I see we have a huge double bullish engulfing candle pattern working to the same area. Now, when I actually take a horizontal ray right here, I see that there's something going on right there, because there is now a minor support being formed right around 190.38. So you see, the market's not going to ever be like pinpoint perfect every time, but 190.40 was that price I just mentioned a couple minutes ago. You can see that now we have like a double top rejection kind of deal happening at 190.40. And as we can see, 190.40 is in the zone that I marked up from my daily analysis. So because I use a top-down analysis approach, when I can identify a high time frame zone, all I'm looking for is low time frame order flow shift. What does that mean? So let's go a little lower into the 5-minute now. Order flow shift is what I'm looking for. I'm looking for either a double top, which means I'm looking for a double rejection from this area, or I'm looking for a shift of structure, something like that, meaning that we're going from bullish, right? Hold on. We're going from bullish to now we're going bearish. I'm looking for a shift, essentially, right? Now, let's see what actually happened. I believe I used the 5-minute to execute this trade off of a candle pattern. So, okay, that's what it was right there. Boom. So, granted, guys, a lot of different conditions need to present for you to be able to capitalize off the opportunity with this method of top-down analysis. You need to have your zones predefined on a high time frame structure. You need to pinpoint it down on a lower time frame, and then you need some sort of entry confirmation to actually go ahead and execute the trade. So in this case, what we got, and if you guys are paying attention, or if I did a good job at explaining wick fills, you can see that now we have a bearish wick fill, meaning that, look, price came to this area, we rejected it again, we failed to have any candle body closure above this area. So that's already showing me we have multiple rejections. 1, 2, 3, 4, 5, 6. We have a lot of rejections on the low time frame of my high time frame supply zone. So this is just supply and demand with top-down analysis at its simplest form. If it, it doesn't sound simple, but it is simple. So as you can see, I entered off of this 5-minute bearish engulfing candlestick that actually was a wick fill for the previous rejection off of my high time frame zone. Wow, that was a lot of words. I'm looking for price to come work this area, and I'm looking for some sort of entry confirmation to go short, because I'm looking to trade a retracement. Okay, I'm looking to trade the equal measured move back down to my previous area of interest. Now, when I go back to like a higher time frame, this is also how I like to identify my targets. Now we just went back up to the 1 hour time frame. And the reason that we did that is because now what we're trying to identify is our exit. Identifying the entry is the first step to taking a trade. The second step is identifying, when to actually pull the trigger on that entry. First, you need to find the zone. Then you need to find the timing to pull the trigger. And then lastly, you need to figure out where you want to get out. Okay? So in this case, my target was our previous area of resistance that turned into support before we came and bought up to the supply zone, right? So what happened here? We had this, we had this, we had that, we had that, and then we had that, right? This movement on the right is literally what we see right here. Boom, 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 right? So all I'm looking to do is to take profit at the last area that has a high amount of probability for price to go to. I'm just looking for the highest probability setups possible. And through using this approach, I'm able to identify not only an entry, a precise entry with no drawdown, but also a precise exit where price is going to impulse to and give me the highest chance of taking a win. Okay? So now as I go down into the lower time frame, I'm using here the 5-minute to execute my trade entry. And as you can see from the moment that I entered right here at 9 o'clock, remember I am in the Eastern time zone as well, every 4 hours, 5 a.m., 9 a.m., 1 p.m., 5 p.m., 9 p.m., 1 a.m., 5 a.m., 9 a.m., so on and so forth. We're going to see 4-hour candle closures. So the first thing that I said is that I'm looking for a 4-hour closure at this zone before I even consider my entry. So I already had a 4-hour candle closure that was a rejection of an area of supply. I went into a lower time frame and looked for some sort of reversal opportunity indication. In this case, we're using a double top rejection pattern. Oh, that looks terrible. Hold on, let's do that again. Ugh. Okay, it looks bad. Ugh. All right, I'm not an artist, but that's what we're looking at, right? Are these double top rejections. And off of that candle pattern, that gave me enough probability that, hey, I probably want to go short here. And based off of going back to the hour time frame and identifying the previous area of structure or reversal, this point right here, that's where I put my take profit at. So now on the 5-minute, I entered at about 190, 25, 20 area. Stop loss about 20 pips just above this area here. So I have a couple pips of room to breathe. And then my take profit is that I'm looking to take out this low here and probably test this low, right? That's kind of what I'm looking at. So as I let the trade play out, you can see that first off, we did not have any drawdown. Drawdown meaning price was not negative. From the moment that I entered the trade, it immediately went into the profit because of the precise entry timing that I used to take my position. Now, as I go ahead and play the trade out, you can see, boom, just like that, we had an impulse short. We took a reversal trade from a high time frame structure using the low time frame to execute my entry and actually, identify my exit. And because of that, I was able to capitalize just a little over 4 risk to reward. Meaning that if I risked about $1,000, I was gonna make about 4 grand back. Meaning I'm making 4 times my money. And guys, this is the simple but not so simple breakdown behind how I was able to capitalize off a pound yen short that allowed me to earn an amount that I used to slave over 160 hours a month to make. And I was able to do that from 9 a.m. to 10 a.m. Guys, this took me an hour. In 1 hour of time, I was able to pull what I used to work a whole month for. Fuck. That's why I want to take my time and explain the method behind the madness. Trading is not for everybody, and I do not win all of my trades, right? I have about a 50% win rate, so for every win that I take, I usually take a loss. But the thing is that when I win, my wins are so much bigger than my losses that it doesn't matter. And in this case, my win was just about $5,000. This is life changing. I'm in the process of my come up in trading. I'm on the route right now to making. Wait, where is it? Focus. There it is. Making my first million in trading, and through having these breakthroughs, through having these back tested strategies, entries, exits, following the plan with discipline, we're slowly working our way towards that $1 million mark in trading. And for that, I am so grateful to God, for giving me that push in the back of my mind to keep trading. Guys, I've been trading since 2018. For the first few years, I dealt with a lot of inconsistency, making profits, not knowing how to keep them, giving them back to the market, and ultimately losing money. And because of all the losses that I've taken, I've understood how to win. Ironically enough, I'm reading this book right now called The Best Loser Wins. It's actually a fantastic book. It's by Tom Hugard, and he's some successful trader out there. And it's talking about just that, right? Is that through losing, you learn how to win. And that's why I really wanted to just share this short segment of time with you to explain at least my thought process but going into this trade and showing you how I was literally able to make over $5,000 in about 1 hour of time. Granted, most of us work a whole month to make that money, and for some people, it's not even $5,000 take home. It could be $3,000 or $4,000 take home after taxes and whatever your investments are, right? So, guys, the power of trading is not something to take lightly. Whether you're just starting off your journey, whether you've been going through this journey for quite some time, do not stop. The best loser wins. And understand that there is light at the end of this tunnel to those who continue to walk the path. I don't care how bad you're down on your account right now. I don't care how much money you've lost. I don't care about all of the bad. I care about the fact that if you're watching this video, that means you have a passion for trading. That means that you're looking at bettering yourself and elevating your skill set so you can become financially free. No matter if you're a successful trader, a newbie trader, or you're having inconsistent success, keep on going. Your time is coming soon. And remember, if you fear losing, you're never going to experience what it's like to win. The best loser wins. And guys, you miss all of the shots that you do not take. Okay? So with that being said, thank you for spending this time with me tonight, watching my video. If you enjoyed the video, please give me a thumbs up, drop a sub. I'm a brand new account, and I want to start doing giveaways. So once I reach 1,000 subscribers, I'll probably give away like a prop firm challenge or maybe free signals access to my group. Guys, this trade, this GBP JPY sell, along with all of my other trades, I'm actually sending out for free in my Telegram group. So go on the bio down below, click that link to my Telegram group. Come trade with me. Come join our family. It's entirely free to join for now. Come join, see the trades for yourself, plug into the community, whether you have a mentor or not. We're here with open arms to guide you through your journey at Vibration FX, which is the name of the trading group. My Telegram group, Vibration FX. So anyway, guys, that's it for today's video. I hope you learned something. Remember to respect the high time frame zones, and when you're using top-down analysis, use all the different time frames in unison to help you understand exactly how the market's feeling and what the market's about to do. Anyways, guys, that's it for me. Have a great day. God bless. Peace.